Welcome to our presentation on Host Hotels and Resorts. And without further ado, let us begin. Host Hotels is a public company that was founded in 1993. It linked with Marriott to create one of the greatest REITs in the world. It's headquartered in Bethesda, Maryland, United States, and it is a real estate REIT. Its CEO is James Rosolio, and it currently has 114 total properties.
A real estate investment trust, or REIT, is a company that owns or finances income-producing real estate. Modeled after mutual funds, REITs provide investors of all types regular income streams, diversification, and long-term capital appreciation. REITs typically pay out all of their taxable income as dividends to shareholders. REITs allow anyone to invest in portfolios of large-scale properties the same way they invest in other industries through the purchase of stock.
The history of Host is very interesting. Starting in 1993, Marriott Corporation splits into two separate entities, Marriott International and Host Marriott. This was a result of a tax-free spinoff of Marriott Corporation. In 1994 to 1996, Host Marriott obtained 55 hotels with investment value of $2.8 billion. In 1995, Host Marriott Services divested the airport and toll road concessions business. In 1998 to 1999, Host Marriott was qualified as a REIT, the largest U.S. lodging REIT. In 2001, by repurchasing leases from Crestline Capital Corporation, they established their taxable REIT subsidiary structure. In 2002, Fortune 500 status was obtained for Host Marriott. In 2005, Host Marriott changed their name to Host Hotels and Resorts Incorporated, further expanding their business. In 2012, the Host Marriott expanded their relationships to include third-party operators, and in 2016, they were the premier lodging REIT across the world.
Host's mission is to generate superior long-term risk-adjusted returns for their stockholders through a combination of appreciation in asset values, growth in earnings, and dividend distributions. Their vision is to be the preeminent owner of high-quality lodging real estate, while their long-term objective is to ultimately provide strong returns to their shareholders. To continue to meet their goals and objectives, Host will continue to own a geographically diverse portfolio of luxury and upper upscale hotels. They will target major urban centers and resort destinations with relatively high barriers to entry. They will also focus on strategically allocating or recycling capital in order to net higher returns that will satisfy their shareholders.
Host Marriott has a partnership with some of the best hotels in the world, including Marriott, Ritz-Carlton, Westin, and many independent brands. The company owns properties and conducts operations through Host Hotels and Resorts LP, in which the company holds approximately 99% of the partnership interests, which are the OP units. The company owns non-controlling interests in many capacities and owns special interests in 20 hotels. Their lodging portfolio includes over 100 luxury and upper upscale, with approximately 57,000 rooms, with a majority of them being in the United States. Host Hotels has been great at increasing revenues yearly by lowering costs and developing more and more hotels outside of the U.S. Their company culture revolves around EPIC, which stands for Excellence, Partnership, Integrity, and Community. This explains why they align their organizational structure with their business objectives to be a top employer in all aspects. Host Hotels has many competitors, including LaSalle Hotel Properties and Apple Hospitality REIT Incorporated, to name a few. But Host Marriott has a far greater market cap and net income than many of their other competitors.
Host is a publicly traded REIT that is traded on the New York Stock Exchange. Their symbol is HST, and it is currently trading at around $18 per share. Here we can see how Host has traded over the last 5 years. After the recession of 2008, Host, along with many other REITs, made huge bounce backs. However, in 2015, Host lost a lot of ground from the Federal Reserve uncertainties. REITs, like bonds, tend to lose value when the Fed raises interest rates, so the instability in the Federal Reserve's agenda during that time span caused Host prices to fall. Since then, the stock price has been recovering nicely, especially as of late from the Trump post-election euphoria. Host has also been doing well in comparison to its competitors. As shown by the bottom chart, Host is providing higher average stockholder returns year after year. Host has seen increases in comparable key metrics over the past year. From fiscal 2015 to 2016, RevPAR has increased by 2.7%, driven by a 1% increase in average room rate and a 130 basis point increase in occupancy. According to analysts, Host's healthy balance sheet bodes well for long-term growth. However, rising supply in certain markets, travel restrictions, currency fluctuations, and overall market and Federal Reserve uncertainties remain concerns. Overall, 2 analysts have rated the stock as a sell, 12 as a hold, and 3 as a buy. Host's average rating is a hold with a consensus price target of $17.62. Host surpassed expectations in Q4 of 2016. They beat revenue, earnings per share, and RevPAR expectations in surprising fashion. This week, Host said that its board authorized a new program to repurchase up to $500 million of common stock. The company expects to invest a total of approximately $90 million to $150 million in redevelopment projects. On December 14th of 2016, James Rizzolio replaced Edward Walter as CEO. As a result, the stock price of Host rose by 26% up until January 3rd.
Our favorite Host hotel, even though there are many great ones, is the Hyatt Regency Maui Resort and Spa, which is linked with Host to provide one of the most spectacular hotels in the world. The hotel has 806 rooms and has unparalleled panoramic views of the magnificent Pacific Ocean. We wanted to thank you for watching, and we hope you enjoyed our presentation.